Let's talk about money, how it's changed from coins and bills you can hold in your hand, the kind that jingles in your pocket or folds neatly into a wallet. For most of human history, money was something physical, something you could see, touch, and even smell. Coins made of precious metals, paper notes with intricate designs. These were the symbols of wealth and trade. But today, money is transforming into something you can't even touch. It's becoming invisible, existing only as numbers and data, floating through the airwaves and across the internet. For centuries, people exchanged coins and paper money to buy goods, pay debts, or save for the future. The act of handing over cash was a ritual, a moment of trust and exchange. Now, most of our money lives in the digital world. It's just numbers on a screen, moving at the speed of light from one account to another, often without us ever seeing a single coin or bill. Two powerful forces are driving this shift: FinTech and cryptocurrency. These are the engines behind the new era of money. FinTech, or financial technology, is all about making your money move faster and easier. Think about how you can pay friends instantly with an app, split a dinner bill, or send money across the world in seconds, all from your phone. You can even apply for a loan online, get approved in minutes, and have the money deposited directly into your account, all without stepping into a bank. Then there's cryptocurrency, like Bitcoin and Ethereum. This is a whole new kind of money, digital, decentralized, and not controlled by any government or central bank. It's powered by blockchain technology, which keeps transactions secure and transparent. While FinTech upgrades the old financial system, making it faster and more convenient, crypto is trying to build an entirely new system from scratch, one that's open to anyone, anywhere in the world. Both FinTech and crypto are changing the way we pay for things, how we save our money, and even how we invest for the future. In wealthy countries, these changes are happening fast, with more people using digital wallets, contactless payments, and investment apps every day. But this isn't just about new technology. It's about a shift in how we live, work, and think about value itself. The digital wallet and magic internet money are reshaping our daily lives, our relationships, and our understanding of what money really means in the modern world. Let's break it down with a simple example. Imagine you want to send money to a friend who lives in another country. In the past, this was a slow, expensive, and often confusing process. Sending money abroad used to mean standing in long lines at the bank, filling out paperwork, and paying hefty fees. Sometimes, you'd wait days, maybe even a week, just for the money to arrive. And when it did, your friend might get less than you sent, thanks to hidden charges and poor exchange rates. Now, with FinTech apps like Wise, the process is transformed. You can send money instantly, right from your phone, at a fraction of the cost. No more waiting, no more paperwork, and no more surprise deductions. These apps use technology to make your money move faster and more efficiently, breaking down the old barriers of international finance. Here's the clever part. The app matches transfers locally, so your money doesn't actually cross borders. Instead, Wise pays your friend from their local account in their country, while you pay into Wise's account in yours. It's like a global swap, making the process seamless and almost instant. But what if you want to skip banks altogether? With crypto, you can. Sending Bitcoin means transferring value directly from your digital wallet to someone else's, anywhere in the world. There are no banks, no middlemen, and no need to trust a third party. Instead, your transaction is verified by a global network of computers, all working together to make sure everything is secure and accurate. Every transaction is recorded on the blockchain, a public, unchangeable ledger that anyone can check. This means your payment is transparent, traceable, and can't be tampered with. In Japan, you might pay for your morning coffee by scanning a QR code with a FinTech app. It's quick, easy, and becoming part of daily life. Or, if you're feeling adventurous, you could even pay with Bitcoin. Some cafes and shops now accept crypto, letting you spend digital money in the real world. In the US, apps like Zelle make it simple to split rent with roommates, or pay friends back instantly, all from your phone. And if you want to get into crypto, platforms like Coinbase let you buy, sell, and store digital currencies with just a few taps. FinTech is all about evolution, taking the old systems we've relied on for decades and making them faster, smarter, and more user-friendly. Crypto, on the other hand, is about revolution. It's not just improving what we have, it's building an entirely new way to move and store value. one that doesn't depend on banks or governments. Today, both systems run side by side. Some people use FinTech for convenience, others dive into crypto for independence and innovation. In many cases, we use both, often without even realizing it. The big question is, which of these systems will shape the future of money? Will we keep upgrading the old, or will we embrace something entirely new? One thing's for sure, we're all part of this grand experiment, and the outcome is still being written. When money changes, everyone pays attention, because money isn't just paper or numbers on a screen. It's the foundation of our daily lives, shaping how we work, save, and dream. Every shift in the financial world sends ripples through society, affecting not just the experts, but all of us. Especially banks, governments, and the people who use money every single day, in ways big and small. Banks, once the unchallenged gatekeepers of our finances, now face fierce competition. Nimble FinTech startups are reimagining what banking can be, offering faster, smarter, and more personalized services. Meanwhile, the rise of cryptocurrencies threatens to make traditional banks less relevant, or even obsolete, by cutting out the middleman entirely. To survive, banks are racing to adapt. They're investing in cutting-edge technology, building better apps, and even exploring blockchain, the very technology behind crypto, to stay ahead. The financial landscape is evolving at lightning speed, and banks know they must innovate or risk being left behind. Governments, on the other hand, want to keep control. They rely on the financial system to collect taxes, fight crime, and maintain economic stability. The stakes are high, because if they lose their grip, chaos could follow. But crypto's anonymity and decentralization make that tricky. Regulators are scrambling to catch up, drafting new laws and policies to manage risks, protect consumers, and prevent illegal activity. It's a race between innovation and regulation, with the rules being rewritten in real time. For us, it's personal. Every new app, every new way to pay brings both convenience and uncertainty. FinTech makes it easier to manage our money, send payments instantly, and access services once reserved for the wealthy. Crypto offers exciting new ways to invest and grow our wealth, but also introduces new risks, from wild price swings to scams and lost passwords. The opportunities are huge, but so are the challenges. Ultimately, our choices, what we use, what we trust, and how we adapt, will decide which technologies win. Every tap, swipe, and click shapes the future of money. We're not just bystanders in this revolution, we're the driving force, pushing the world of finance forward with every decision we make. The future of money is in our hands. Together, we'll decide what comes next. Banks looked slow at first, but they're not standing still. They've transformed their apps. Now you can budget, freeze cards, and send money instantly. Banks are investing in and partnering with FinTech startups, sometimes even buying them outright. They're using their size and trust to offer new tech-driven services to millions. Even blockchain isn't off limits. JP Morgan created its own digital coin for instant payments between big clients. Banks are blending old reliability with new technology, proving they can still compete. The result? A financial system that's faster, smarter, and more user-friendly. The dinosaurs are learning new tricks. Governments don't like losing control, so they're stepping in. They're building rules for crypto, defining what's legal, what's taxed, and how to protect consumers. The EU's MiCA and US agencies are setting the stage for safer, clearer crypto markets. Governments are also using FinTech to improve their own systems. Think direct deposit for stimulus payments or digital tax filing. The next big thing? Central bank digital currencies, CBDCs, digital dollars, euros or yen, issued by central banks. CBDCs could make payments faster and cheaper, but raise big questions about privacy and surveillance. The world's biggest economies are actively researching them. The digital dollar is coming, and it could change everything. The real test is how we use these tools in daily life. In Germany, apps like N26 and Revolut make banking mobile and easy. In the US, Apple Pay and Google Pay are everywhere. No wallet needed. FinTech has made investing accessible to everyone, not just the wealthy. Apps like Robinhood let anyone buy stocks or crypto with a few taps. Crypto is now mainstream. Some treat it as a serious investment, others as a curiosity or a gamble. Millions in wealthy countries own some crypto, signaling growing acceptance. Our habits are changing. Money is becoming more digital, more personal, and more powerful. The revolution is happening in our pockets. Why does all this matter? Because faster, cheaper money changes everything. Small businesses get paid instantly, improving cash flow and growth. Individuals can send money abroad without losing it to fees. FinTech creates jobs and fuels innovation, making economies more dynamic. Investing is now open to everyone, not just the rich. Fractional shares and no-fee apps let anyone build wealth. Competition forces banks to lower fees and improve service. The result, more choices, better products, and a financial system that works for people, not just institutions. This isn't just convenience, it's a fundamental upgrade to how economies work. The benefits ripple out, creating opportunity and inclusion. The bar for financial services is rising for everyone. But it's not all upside. There are real risks. Crypto is volatile, fortunes can be made and lost overnight. Scams and hacks are common, and consumer protections are still catching up. As more money moves online, cyber attacks and data breaches become bigger threats. CBDCs could mean more government surveillance of our spending. Automation in FinTech could eliminate traditional jobs, leaving some workers behind. If a major FinTech or crypto platform fails, millions could be affected. There aren't always safety nets. The interconnectedness of new and old systems could create new vulnerabilities. Regulators are racing to keep up, but the risks are evolving fast. The future of money is powerful, but it's not without danger. So, what's next? The future is a hybrid. Old and new systems fuse together. Banks and fintechs will blend, offering seamless, all-in-one apps for everything financial. Crypto will mature, with better regulation and new uses beyond speculation. Blockchain will quietly power industries behind the scenes. Central bank digital currencies could transform how we pay and how governments manage money. The debate over privacy and control will only get louder. The rules we set now will shape who benefits and who's left out. Understanding fintech and crypto is essential for everyone, not just techies or investors. The future of money is being built today and we all have a stake in it. Stay curious because your financial future depends on it.